We're talking about the pain. We're talking about home builder sentiment rolling over yesterday. We're talking about what it means to have a mortgage rate at 6%, and you are still seeing bidding wars. Are we underestimating the demand, the strength in this housing market?
Well, absolutely. Before the Fed was raising rates, bidding wars in most of the markets we cover across the country were somewhere in the neighborhood of 50% of all transactions. Southern California was two-thirds of transactions. There's still bidding wars now, so it's just much more muted. I think the narrative is that you can hear crickets, and that is not the case. It's just not what it was, and what it wasn't sustainable.
But how much are we speaking about idiosyncratic markets, right? I mean, the market in Connecticut, for example, very different than the market in Phoenix, Arizona, or the market in San Francisco. How much are we seeing potholes where you are seeing wholesale declines in prices in some areas, particularly the Sun Belt darlings, whereas other areas are holding in more significantly?
I think the chatter on pricing is more about sellers cutting asking prices more than wholesale price declines throughout a region. In aggregate in these regions, because inventory is so low, even with the increases that we've seen, there's a fairly firm underpinning underpriced. It's certainly, I'm not saying we're not looking at some sort of price decline a couple quarters out, or sometime in 2023. But I don't see this as a correction scenario, because the market was wildly overweighted on the demand side going into this, and inventory was literally obliterated. A typical market, a submarket might have 200 listings. Just before the Fed rate increases in the beginning of the year, there might have been 10 listings, 12 listings. Now there's 50. It's still 75% below. I mean, that's sort of the scenario we're seeing in the different markets that we cover.
But just to push back, we're seeing the volume of sales drop off a cliff. And a lot of times that's a precursor to price drops that are more substantial, right? It really is a matter of where people are willing to transact, especially if their all-in borrowing costs are rising by hundreds of dollars a month. I mean, at what point does that housing, the sales slowdown translate into something materially in price?
Yeah, so typically there's an average of about a 15-month lag between sales correction and some kind of price decline. I think what many people get wrong in a market pivot like this is the scenario is external event, sales activity falls, then inventory rises, and then because there's more supply, prices correct. But housing prices are sticky on the downside, that they take longer to fall than they do to rise. And we're in that sort of discovery period right now. But what's different is that supply in general is still relatively low as compared to historical norms.
Jonathan, you were talking about how just because rent increases are slowing down doesn't mean you're going to see a decline in rents. And you've talked before how rents typically are pretty sticky, that they don't go down that much.
Right.
Does that mean that the transmission mechanism of mortgage rates where they are is going to be largely ineffective at bringing down some of the base costs, like rents, like housing prices, that people are imagining is the case?
Right. I think, housing is about 30% of CPI, and it's owner's equivalent rent. It's not, any kind of correction in housing prices is going to bear little impact on, or limited impact on inflation, because it's owner's equivalent rent. And effectively what's been happening is you have a slowdown in the sales market, and largely because of the loss of affordability with a spike in mortgage rates. Mortgage rates are literally double what they were at the end of December. And the scenario ends up, you're pushing those people into the rental market, which is already tight, which keeps rent elevated, which makes me worry that the Fed path is going to be longer than we think in terms of pressing rates higher.
How high could mortgage rates go in your view?
Who knows? I'm not it's funny. About a year ago, I was basically saying that rates should be in the fives. That would be a more normalized market, maybe the sixes. Um, I'm skeptical that they can leave the sixes, but I still think there's some upward movement going forward. There's no barring a recession. I mean, the idea that the Fed is taking a baseball bat to the economy is something that has to factor in housing since it's so large. And I'm not sure if that's going to be effective just because of the owner's equivalent rent calculation driving rents or keeping rents high. The opposite of rising rents is not falling rents. It's stabilizing rents, in my view. And the only thing that's going to bring rents down is going to be some sort of recession, at least at this point.
Jonathan, 20 seconds. Have we overdone the back to cities trend, or is that going to continue?
I think it stays where it is. It's pretty close to that. This is not returning to the mean sort of scenario. We've been working from home too long for this pattern to go away.